Well, we thought this might be a good moment to look back to this time last year and recall what the experts were saying about the US economy. A year ago, the consensus view was that unemployment would need to go up to 4.5%, and the economy would need to stall out in order to get inflation down to where it is today. But it turns out that was wrong. And you can see that here in the chart. US growth has been much stronger than the naysayers believed. Unemployment has remained below 4% this entire time, but inflation has actually fallen in line with that forecast. In fact, today we learned that GDP grew by 4.9% in the third quarter, even as core PCE inflation on a quarterly basis fell to 2.4%, its lowest level in nearly 3 years. That strong economy is a testament to the resilience of American consumers and American workers, supported by President Biden's plan to grow the economy by growing the middle class. Consumer spending is robust as Americans have rejoined the labor force in record numbers, and real wages are up over the last year. President Biden vowed to build the economy from the bottom up and the middle out, and that's exactly what we're seeing in the data. Last week's survey of consumer finances showed that Americans' median net worth is 37% higher than it was before the pandemic, adjusted for inflation. That's the largest gain in the history of the survey, and the wealth gains were strongest for the bottom half of the income distribution and for Blacks and Hispanic families that have traditionally not seen as large gains. Just yesterday, the UAW and Ford reached a historic tentative agreement that provides a record increase for auto workers and is a testament to the president's strategy to ensure a strong future for auto manufacturing here in America with good union jobs. That's good news for American workers and good news for the future of the US auto industry. So in the data in that agreement, we can see that the president's strategy is yielding real results, even as we continue to work to bring costs down.
Thanks, Liv. So the president celebrated the GDP report, saying that it's a testament to the resilience of the American consumer. But the report also showed that personal savings dropped by $360 million. Do you have a message to Americans who are dipping into those savings to afford the inflation?
Well, again, as I said, what you are seeing is Americans are back in the labor force in record numbers, much higher participation that was anticipated and higher than pre-pandemic. So they're at work, and that is showing up also in the wealth number. So if you actually look at American households' median wealth in inflation-adjusted terms, it's actually gone up since before the pandemic. So I think the U.S. consumer, U.S. workers, they are absolutely the reason that we're seeing this resilience in the economy, and they are actually seeing increase in their wealth over this period.
Well, what about a message to Americans who are dipping into savings to afford their lifestyle?
So I think that, again, because net wealth is rising, because real incomes are rising, because Americans are working, that's exactly what we would want to see in the economy.
Are you no longer worried about a recession in the near term?
So I think the data in recent months has all pointed in the same direction, which is that we are seeing strong ongoing growth with inflation coming down. We're seeing unemployment staying below 4%, 20 months in a row now, with inflation coming down. And so those data, which have been sustained now for a relatively long period of time, suggest that there's ongoing resilience there. We're seeing small business formation at a record rate. There's a lot of dynamism in the economy that people are really taking notice of. And you know that the president has a historic legislation that is leading to historically high amounts of construction in the manufacturing sector. It's really leveraging private sector investment. So for all those reasons, the ability to see the economy continue growing with inflation down, strongest growth, lowest inflation among the G7.
Yeah, John.
Thanks a lot. Since this GDP number was released, student loan repayments have begun for tens of millions of Americans. Is this a headwind that you see in the U.S. economy for Q4? What other headwinds do you see for the rest of the year?
Yeah, so the consumer was very strong in the third quarter. And we believe that based on the strong job market that we can continue to see resilience there. But the president has always said that he would like to see student debt relief go forward. He's continuing to look to find avenues to do that in the wake of the Supreme Court decision. We've already announced a number of programs that have led to large and significant relief for a large number of Americans, but he's going to continue working to make sure that the full amount of student debt relief is available over time.
And then what other headwinds do you see for the fourth quarter?
So right now, what we see going into the fourth quarter is continued ongoing investment on the basis of the clean energy tax credits and the CHIPS program, the infrastructure law. So there should continue to be a lot of private sector interest. We certainly see it in the numbers, $614 billion worth of private sector investment on the basis of those laws. So those things I think will continue to provide uplift. The global economy, there's some soft spots there, so perhaps a little headwind there.
Last question, Guy.
To follow on the consumer spending side, do you expect the pace of consumer spending to ease in the coming months? And a follow-up on that, if I can.
You know, there is the possibility that from quarter to quarter, you see some variation. So it's hard to know right now what retail spending and consumer spending more broadly is going to look like. Again, consumers have good sources of income, real wages rising, strong employment, strong participation in the labor force. But from quarter to quarter, we could certainly see variations in the relative contribution of consumers relative to business investment, for instance.
And how do you see the recent spike in borrowing costs affecting consumer spending?
So certainly consumers and businesses are taking into account the cost of credit, and that is, I think, a headwind on the economy. Despite that, we've seen really strong GDP, 4.9% in the third quarter, and we think that's because there is strong support from the policy on the investment side of the economy, the president's historic legislation there, and his broader plan to grow the economy from the middle out.
Okay, thank you so much.
Thank
Thanks,
you.
Leo.